Hello, everybody. So I just wanted to read you my notes for the Q2 earnings call. In a nutshell, it was excellent, only great news, and I didn't see anything negative. But really quickly, here are my main notes for the call, for the Q2 call after SoFi's, great earnings, and stock is up 20% today, and lots of good stuff happening. So, marketing expenses are down, and they've been down. They're down quarter over quarter, and they've been down for 3 quarters in a row, which is a great thing. Then, SoFi reiterated their goal to become a top financial institution. We'll see at the end what they mean by that. Then, they have no issues selling their loans, i.e. securitizing their loans, and they sell them with a margin. When you listen to the call, they tell you, between 1 and 4% margin you can hear in their securitization process. So they have no issues with that. That was a concern back last year, back late in the second half of 2022. Not a concern anymore for now. Then as far as marketing goes, their goal, the way they rank themselves, why is marketing going down, is because they are trying to build unaided brand awareness. So that would explain things like why they bought a stadium. I'm not that they didn't buy a stadium, but to the mind of most people, they look like they kind of own the SoFi Stadium, right? They sponsor it, but they look like they kind of own it. That aids with brand awareness. For example, the SoFi Stadium is an example of how they do that, but they do advertising here and there. And so when Anthony Noto joined the company in 2018, when they did surveys and they asked, what's a top financial institution you'll consider, they only got 2%, and now when you ask the same survey, what's the top financial institution you'll consider, they're at 8%. I mean, roughly, high single digit. They didn't say the number, so I'm just assuming 8%. Top banks, like the JP Morgans of the world, they are in between 20 and 30%. So they are making huge progress, right? They did a 4-fold increase in their reputation. It's impossible for a big bank to do a 4-fold increase in reputation. So that's a way to measure how well they're doing. Their flywheel is working. Right, they're getting more customers through the door. Customer acquisitions are going down. There's a lot of cross-buying opportunity. The products are getting viral, especially the 2 million FDIC and the 4.4% interest rates. It's paying off. Their investment in marketing is paying off, and the CEO is very pleased with that. Then they're showing impressive growth in deposits, mostly due to their high yield accounts. And so that leads for them to have a lower cost of funds when they issue their personal loans, of course. It's noteworthy to say that 90% of their deposits come from direct deposit customers, i.e. people that have their paycheck deposited into SoFi. So SoFi is the main financial institution that those people use, and they're adding $2 billion a quarter in deposits of liquidity each quarter, and they're confident this will keep going. They're confident they can always have the best APY and always be competitive, because they move fast, they're agile, they have no branches, they don't have the legacy financial institution, but whereas they don't have the legacy costs, right? The Q3 margins are very healthy. They expect them to stay healthy as well in Q4. They expect them to stay healthy in Q3 and in Q4. They expect the 1.5 products per member to stay the same in the medium term. If you watch my prior video on SoFi, that's what I noted. They have 1.5 products per member, but they expect that over time, right, as member growth inevitably slows at some point, even though it's not showing any signs of slowing down, at some point it will slow. And when that slows, they hope that the revenue can grow by moving from 1.5 products per member to, say, up to 5 products per member. That is their hope. Right now, they're focusing their marketing on member growth, mostly. The student loans demand. This was something that I was very curious about. I was very pleased to see the analysts not push them hard in any way on the student loans. In fact, there was only one question about student loans, so my fears may have been a little too much about the student loans. Seems like the market is getting it. Now the market is focused on their Q4 positive gap earnings. That's what the market seems to be focusing on. So that's very, very good news. I mean, like I said, I wasn't going to sell my stock for that. That was just a concern. It's very good news. They're expecting to see a bump in refinance in Q4. Here is, in a nutshell, what they say. They're still expecting a battleground, right? It's going to be a 6-month battleground still, as I explained in my video yesterday, right? Because we're still confusion as to what a grace period is and a repayment ramp is, etc. There's still confusion. It's going to be a 6-month battleground. But Noto says it's a 10-year opportunity. Why is it a 10-year opportunity? Because there's 40 million Americans that still have a lot of student loans. And SoFi barely even refinanced 1 million. They're at under 1 million of refinancing. So the market is very large. It's a very specialized market with different constraints, and they're expected a recovery in 2024, but not a recovery in 2023. Just a slight pickup in Q4. So this is good. This is not setting up the market for disappointment. This is like steering the market away from that student loan question, which I'm very happy to see that. Then they were talking about the Oddity IPO. So they were the first. They were the only company to offer the Oddity IPO to retail investors. And an analyst asked a question about that. Did you get any money from that? And the CEO said no, they got very little money, tiny fees from the IPO that they led, but that was not the point. Their point was mostly a point of marketing and asset under management. By offering IPOs, they hope that they can get more customers to sign up, and they get better marketing because those IPOs are really hard to get for retail investors. And SoFi is on the side of a retail investor and is trying to foster retail investing and foster accessibility to finance. So this is mostly helping them with their marketing and their image. Then, how do you measure a top 10 bank? So they've reiterated the goal. The goal is to be a top 10 bank as measured by market cap, right? So if that becomes the case, there's multiple baggers coming for this stock. If that becomes the case, it's good to see that it is the main goal of Anthony Noto and the company. Then the analysts expressed happiness with the fact that the expenses are showing some synergies and the expenses are going down. The CEO responded that yes, the EBITDA, adjusted EBITDA is higher than most anticipated because indeed the expenses are going down, and they've held back many investments, as you know, Q1, Q4 2022, Q1 23, Q2 24 were very uncertain. They've held back many investments, including marketing, as we just discussed. But now they have quote-unquote opportunity money. They have opportunity money, and they may want to spend it on acquisitions, which you know, for a company that's growing somewhat makes sense, as long as these acquisitions probably would need to be in the Galileo segment. I think it would make very little sense from a marketing standpoint for SoFi to, say, acquire another consumer-facing bank, because if they did that, they would be growing just like every other bank grows. Like, you know, every traditional bank, they typically grow by acquiring another bank. No, SoFi is all about organic growth, so I don't think they'll do that. I think if they do an acquisition, it would be for acquiring unique technology, something to add to their Galileo product. And their Galileo product, which is the AWS of finance, right, or AWS of banking, they've added new partners with Galileo this year, although that contributed a little bit, just a tad to the profit, not much, but it's more about the current growth in their current partners. That's the reason why Galileo is up. As a reminder, the sales of Galileo are up this quarter while they had been trending down. So we've seen a shift in Galileo with this division of SoFi is now growing again. And so the CEO is very excited about Galileo for 2024. Lastly, CEO ended the call like he does every call. He ended the call congratulating the team and congratulating the culture and saying that the team and the culture is essential to the SoFi success. And even though I typically always take these statements with a grain of salt, in the context of SoFi, I do not, because this is a company that has very few employees compared to the legacy banks. What they've been able to achieve with so few employees is very, very impressive, right? This is a company that's growing customers at close to 50% more customers year over year, right? Think about how crazy hard this team must be working. And so that's why I fundamentally believe that statement. Companies like SoFi, companies of the 21st century, are highly efficient machines. They're efficient companies that are able to go ahead and conquer new markets, and clearly they move very fast. SoFi moves very fast, as evidenced by the numbers. So it looks like the stock is back up. It's still not near where it was in the early days of SoFi being public, but I believe it will come sooner than later, because SoFi is a much bigger company now than what it was when it became public. Much bigger, and the stock price is up 20%. We'll see where this goes. Very happy to own SoFi. Not touching my shares, not adding, not selling, just sitting on my position for 10 years, and we'll see where this goes. This was not investment advice. This is just entertainment. I hope you were entertained. I appreciate your likes, appreciate your subscribes. Have a wonderful day.